Hey there, it's Jonathan here, and today I want to talk to you about the three tech stocks that I love this earnings season. And as you probably know, the tech sector has outperformed the broader market by a very, very wide margin, making up basically all of its COVID crash losses and punching out a new all-time high. And what I love about tech the most right now is that it's traditionally an offensive sector of the market, meaning that when times are good, tech usually outperforms strongly. But in downturns or recessions, the tech sector often sells off very hard, and other defensive sectors like utilities, consumer staples, these sectors tend to outperform as risk-off havens, right? Places where you can be still in the stock market and enjoy outperformance, but not have the risk of some of the more speculative tech stocks. But right now, tech stocks are playing both defense and offense. It's kind of like, if you're a football fan like I am, it's like if you combine the Kansas City Chiefs offense of 2019 with the New England Patriots defense. That's what the tech sector is right now. And I don't expect that to reverse anytime soon as these companies continue to show that they can do a lot with not very much. They don't have a whole lot of assets, especially the software companies. They're very light on assets, very heavy on intellectual property and human capital, the brains that put this stuff together, versus other places of the market that have, say retail, where there are brick and mortar stores to deal with, or industrial stocks that have factories that have to be maintained, people, who may or may not be able to make the equipment that they need because of social distancing concerns. So tech is in a very good position, and I expect to see this sector continue to do very, very well. So let's go ahead and dig right into the three stocks that I'm digging right now. Okay, so first stock on my list is Texas Instruments. That's ticker TXN. And they're a bellwether chip maker. I first came into Texas Instruments really with calculators, and I think a lot of people did as well. But they do a lot of different things now. They're involved in the automotive sector. They're involved in They're involved in power management, an all range of chips that go into devices, more than just calculators, Internet of Things devices, all kinds of things. But what I really like about Texas Instruments right now is they reported earnings yesterday on Tuesday, and they blew away estimates on both the top and the bottom line. So that's sales and earnings, and with good reason. Their chips continue to be in high demand, even though they've seen some weakness in the automotive sector. They're still doing very well in their core industries. And you take a look at the stock. On the momentum, the stock broke through key resistance here on the yellow line. That's at 134. And the stock just recently, the last couple of weeks, showed a bullish golden cross. That's where the 50-day moving average here, the red line, crosses above the 200-day moving average, which is this blue line, and the stock you see is very strongly above both of those averages. And then breaking out above that resistance here, you see a couple of tests here in February, in June, but finally the stock's been able to break out on some surging volume there. So a really good sign here. This is a really, really good entry point if you're not already in Texas Instruments, because you have this resistance line, which should provide strong support for entry points moving forward. So great stock. If you're an income investor, you're gonna love Texas Instruments because they're paying a 2.6% dividend right now, which is just 56% or so of the stocks of the company's free cash flow. So that's a very, very strong indicator of dividend safety, which is especially big for a tech stock. A lot of tech stocks do not pay dividends, and a lot of dividend stocks in general, or dividend paying companies, have cut their dividends or suspended their dividends altogether. But Texas Instruments shows no signs of doing that. So great tech stock, great income stock for folks that are looking for retirement income. Great all the way around. Let's go ahead and take a look at our second stock on the list, Corning. Corning is a glass maker that's very, very integral to the display and fiber, say the telecommunications fiber networks. If you've got an iPhone or an Android, Samsung or what have you, you've got Gorilla Glass, which is made by Corning, on your screen right here. They also make displays for large screen televisions and other types of high value displays, and their business is doing very, very well. They report earnings next week, and they've beaten earnings expectations in 8 of the last 8 quarters. So a very, very strong record of outperformance. But you take a look here at the stock. Let's just zoom in here a little bit. The stock just in the last couple of days here has broken its near-term downtrend here, and stock's recovered. It's overtaken its 200-day moving average, which is this blue line here. The 50-day moving average, which is a shorter-term average, is trending higher. So this breakout here is punctuated by a longer-term shift in momentum. So I really, really like this. I really like to see this ahead of earnings, and a lot of companies in the retail space, in the consumer technology space, are reporting better than expected earnings. Best Buy just reported earnings this morning, and their online sales have tripled. And just generally, sales of their consumer tech products are soaring. So Corning, which reports here in just a couple of days here, they should you'll see that impact on their earnings statement. So great stock, great breakout here ahead of a major earnings report. A lot of momentum here. Last stock on the list is CTXS, and that is CTRIX Systems. And if you're not familiar with these guys, they're a leader in virtualization and networking technology. They basically facilitate, they allow people to basically log into their desktops from home. Like if you work in an office like I do, and you're not at the office, you can log into your computer. You can run applications completely in the cloud. A lot of really, really important functions that enterprise businesses provide to workers and whatnot. It's great company, great stuff here. But what I really love about them right now is that they have just experienced an explosive breakout. As you can see here, I've highlighted 2 lines here. These are the trend channel, the horizontal trend channel that the stock has been trading, and you see this range between 136 to 156 here. They've got earnings coming up later this week, and again, this is a strong sign. You're seeing companies that are in the work from home space doing very, very well. Tech earnings in general have come in stronger than expected, so stocks exploding ahead of these earnings. And if you take a look, take this range here between 156 and 136, and that's a $20 range. You apply that to the breakout here, and that gives you potential upside target on the stock of 176. So a lot of significant room here for upside. And as you can see here, the stock pulled back a little bit yesterday after breaking out, popping some 8% or so on Monday. And the stock is just pulling back. This is another really nice entry point. You've got two solid tests here of 156. So this is anywhere from where the stock is now down. If the stock pulls back to about 156, this should provide a nice level of support for an entry. And yeah, if you're looking forward to earnings, I mean they have themselves beaten earnings in 7 of the last 8 quarters, including 3 straight in 2020 alone. They smashed expectations in their April report. So if it's any indication of where this stock, where earnings could go, we could see an explosive earnings report followed by another leg higher for CTRIX here. So great stuff. Again, all 3 of these companies that we looked at today, Texas Instruments, which is TXN, Corning, GLW, and CTXS, they provide really, really strong opportunities here for this earnings season as the tech sector continues to show strength, and will likely continue to do so for the foreseeable future, being one of those big bellwethers that's playing both defense, where people want to be in the market, and offense, where there's a lot of growth potential there. So great stuff here. Take a look at these 3 stocks as they begin to report here. And thanks so much for watching today's video. Again, I'm Jonathan Rodriguez, and I'll see you next week.